Hi friends, let us look on Nifty and Bank Nifty levels as the week has been closed. Let us see how the weekly candle has been closed for this week, and we'll also see how the levels which we marked on Thursday, how they worked on Friday. We'll also see what will be the levels to trade on Monday. Let us take a look. What you're seeing on my screen is Nifty weekly chart. So there was a big red candle. So complete week it was red candle. It is not giving any direction here. Still it is completely sideways to downtrend on weekly. There is nothing much to look on weekly chart, so I'm going on to daily. So on daily we have this demand area around 17,328. On the budget it almost came to the demand area, and from there we have seen some bounce back. Probably maybe if we see any fall again till 17,300 area, then we can plan some bull call or some weekly or monthly trades in Nifty with a stop loss below 17,000. And on the upside, we are seeing this supply area around 17,800. If you go there, uh, when the market move there, then we can plan some bear put strategies over there. For now, these two are the fresh supply and demand areas on the daily level. So now let us look on 30 minutes level. So on 30 minutes, these are the two supply areas which we marked on Thursday for Friday. It didn't give entry. If it has come here, we would have definitely tried some short. It didn't give any entry. Let us look at some conventional price action traders. So if you see, if someone have marked any trend line over there, and if someone truly rely on trend line trading, the price could not sustain above the trend line. So definitely they would have gone short below this, maintaining SL closing above the trend line. So it might work for them. Uh, Personally, I can't take such trades because I am seeing so many hurdles here while coming down, because there is this previous close. Maybe it can bounce from there as expected. There is a bounce again from the trend line we have seen coming it down. Maybe from the previous swing low, there could be some support. So normally the way I trade is like, if at all, if it go below this, this is where I like to take trades. I don't want to take trades where there is some business happened on the left side. There was no clear trade on Bank Nifty for us. And for Monday, I'll just show you the levels on 15 minutes. So definitely around 17,730. We have the supply area on 5 minutes. If you see price sustaining above 17,500, definitely we can try to uh, go for long this as the first target. Once we enter long here around 17,500, maybe around 17,600 area or little before that, we can exit, wait for the price to go and close above. If you see with your eyes that the price has been taken out and if it is sustaining above, then we can look to go long for the higher levels. This is about Nifty. Let me quickly go back to Bank Nifty chart. Let me open the Bank Nifty chart. So this is the Bank Nifty chart. Let me remove these lines. So here after a fall in price, we have seen this doji candle and we thought there could be some pullback. As expected, there was some green in the morning. Later today, it gave up all the green and it ended up as a red candle. Still, it didn't go below this. It didn't close or it didn't even go below this doji candle. So we can't maintain the bearish view. It will be little hard to maintain the level on the lower side because on the daily we have seen so many big wicks coming here. So anywhere from this area, there is a chance of bounce back from anywhere in this range. So any closing below 39,500 will again open doors for the much lower levels. So this as the first target, 38,400, and this as another target, 39,350 area. Below that, straightly it can go till 35,000. So for now, let us not go for any conclusions. For now, let us wait and see how the Nifty will behave in next few days. If it go and close below 39,500, then we'll take decision accordingly. For now, while moving back, first resistance Bank Nifty has to face around 40,500. From there, the range is very big. As we are on daily chart, the range is still like 40,900, almost 400 points of range. So anywhere from this range, there is a chance it can come back. So this is the first hurdle. Anyway, trading above 40,100 could take the bank nifty to much higher levels. There is no trade that we are planning on daily chart. This is just for the levels, just to keep in mind, like, in case if there is any big movement, then it will help us to act accordingly. Now let me go back to 15 minutes. Okay, first let me hide. Okay, 1 second. Let me hide the chart of today. If you remember, if you go and watch yesterday video, these are the two levels which we marked on Bank Nifty. This is the 15 minutes supply area around 40,000, starting at 40,300 till around 40,400. So if you remember, this is what exactly I said yesterday. I said there is some resistance around 40,150 area, which it was struggling to cross this area from last 2-3 days. If you see, around 3 days back, it was trying to cross this 40,150, but sellers were pushing market below that. Again after the next day also it tried and it came very close to 40,150. Again, it was facing some resistance. It tried multiple times on Wednesday as well, on Thursday, I believe. Yeah, and this was our plan for Friday. So we thought if price sustain above 40,150, first it can clearly go to this supply area, and in order for it to go to the above area, there is a high chance it can go here, come back, retest the level, and then it can move much higher. This is how I said in the yesterday video. Now let us see what happened. In the first candle itself, it opened above this level and it went much deep into this zone. And let me tell you, I'll also talk about the trades which I have given, like what was the logic behind that. See, when I was bit confident market can go much higher, at least this was my first target. So when price was here in 5 minutes, I gave 40,200 call around 340 with a target of 400 and 480. So once there is any strong candle closing here and when there is another green candle starts here, easily our second target 480, 500 could be reached on that 40,200 call. But unfortunately, I took the entry and later I posted it in the group. By then what happened? Price moved from 340 to 360, 370. Then I asked you not to enter at the higher prices. And this movement pushed the call all the way from 340 till 440 change. We came out around above 400 level. And then the next candle, when it came almost to this area, this is where I asked if for risky players to see if this is a retest, there is a high chance market should bounce from this level. And I asked for the risky players to try the same call one more time, but that didn't work. The price came much lower. So their stop loss has been taken, that 30-40 points of stop loss. Let me go back to the 5 minutes. This is where we have traded most. Or let me use moving averages chart, because this will give you more edge to your charts when you take help of some indicators like moving average, pivot points and all. So we clearly know from there the price has it got rejection from the first supply area. And then see what happened throughout the day. Throughout the day, this is 200 moving average. Throughout the day, it was coming close to the 200 SMA, facing resistance, coming down, again going back, 200 resistance, again resistance. And see, around this area, look at this wick, it went all the way above 200 SMA. So 1, 2, 3, 4, there was almost 4 times tested this 200 SMA, and I was seeing this green candle going above this 200 SMA. At that point, I asked you guys to keep 40,100 call ready to enter into that. But I was waiting for the candle to close here and the next candle to take the high of it. That is the reason I asked to enter 40,100 call above 345, which means by then the price would have come clearly much higher above the 200 SMA, and that clear breakout should take the price to much higher levels. That was the plan. But what happened? We didn't get entry in that call. it gave up all that profit. Again, it closed below 200 SMA. And from there, we have seen this rejection. Normally, when there is a false breakout, there will be a strong reversal in the market. I didn't want to give you guys that risky trade because we don't know at any point market can move back. See, it can come back to this pivot point. From there, it can bounce. Even it can come much lower here to this yesterday swing low. It can bounce from here as well. I want the price clearly to close all the way below this so that we can aim for this target of 39,700 area. That is the reason I asked to enter a put of 39,800 at above 270. When I was giving this call, the price was, I believe, around 220, 230 somewhere. I want you guys to enter below this level so that we make sure all these supporting areas are taken out. So we clearly entered the put somewhere here around 270. The price went almost to 290 change, something like that, but it didn't work. It was supposed to go here. There is nothing in between stopping Bank Nifty to go there, but it was not going. When you look at in such cases, no, people can't see anything here. Generally, there will be some trend lines which will be going in between, which might have uh, given support to the price, and from there it may reverse or something. When I look, there was not even any trend line or anything. So then in such cases, what we should do, we need to see what is the leader index doing. What is the leader index? Nifty. When I looked at Nifty chart, Nifty was clearly taking support around this area. If you see, I was expecting Bank Nifty to go down, but Nifty, it was almost at the earlier swing low. Only if this breaks, then it can go much lower. Even Bank Nifty also we can see going to much lower levels. So that is the reason I asked you guys to maintain only 20 points of stop loss and to leave the trade, or for risky buyers to exit at the buy price. So for risky players, that 20 points stop loss have gone because of Nifty not supporting over there. That trade also didn't work. So that is what happened yesterday. Now let us look for some levels for tomorrow in Bank Nifty. In Bank Nifty, this complete area is not tradable area. You see lot of business happened, buying, selling, lot of things happened in this area. So no need to do any trading here. If you see any strong closing above 40,140, then we think of, we'll see like, where market open, and then we'll take action accordingly. But if one want to rely on any of the levels, so just be bullish only above 40,150 again. This as your first target, around 40,350 levels or something like that. If price sustains above that, then 40,600 is also possible to see on the upside. On the lower side, if you see price coming till 39,700, we can try to go long here. Below 39,600, there could be much bearish in the market. These are the few levels, and during the day, we'll see if we get any proper entry. I'll keep you posted in the group. So as today is Saturday, during the weekend, take some time, watch this video. I'll just explain few more things here. Couple of spreads, how we took and how they worked out and all. First, I'll just go back to Nifty. We have taken one bull put spread in Nifty. This is the 75 minutes chart of Nifty. We have this nice supply area over here. So it has been posted in our group. When the price go till 18,080, we can go for some bull put spread. And that too, I asked to enter in the month of April, just in case if price go sideways or if something happens, we will still have enough time in our hand to adjust the trade and to come out with no loss. And we got the entry. When we got entry, what we did, I'll just show you my Opster, the trades, what we have taken. So when the price came here, this is where we entered bear put spread. So this was the Nifty trade which we have taken. and we closed the trade. We bought 18,200 put and then we sold 17,200 put. And then when market came down, we converted that into ladder. We sold 17,400 and we bought 16,700 put, and we moved 18,200 put. We booked that profit and we moved it to 18,000. And finally, when it was giving around 20K, 19, 20K, we closed the trade. See, just in case if we have not done any adjustment to this trade, by now, if you want to see what would have been this trade profit, I'll just go back to the original position like how I entered before. It would have been in around 45,000 profit by now. But we booked around 20K profit. We came out. We didn't expect this much fall. So we came out. So on top of that, we do have entered some bi-directional trade. This is our monthly Bank Nifty trade which we entered. Basically, this is monthly iron fly. Iron fly is a non-directional strategy. Uh, Non-directional means it's not like it don't move more than 100 or 200 points. When you enter non-directional strategy on a monthly chart, you are expecting market not to go 2000 points, more than 2000 points from the current market and more than 2000 points below the current market. So that is what non-directional range which we are maintained in the Bank Nifty. If you see, we entered around 41,500. And right now market is at 40,000, 39,900. With some sort of adjustment and all, we were managed to keep the trade still in green. It is right now in 30,000 profit. And on the downside, the risk is 17,000. On the upside, the minimum profit is 32,000. In case if it expire around 41,500, the maximum profit we get will be 1,27,000. Anywhere inside this green pyramid, we'll get some nice profit. And our next thing, what we need to do is, if there is any bounce back or even if there is any fall or something like that, we need to cover this 17,000 loss by end of March, and we need to convert this. As you see the risk free on the upside, we need to convert, or we need to manage this trade to make it green on the downside as well. That is like, making trade in complete green. So wherever it goes, it has to give you profit without giving any loss in the trade. So this is the monthly iron fly and how we are adjusting. There is one trade which is going in loss right now. This is cross calendar spread. So we are managing this. Still we are close to the green area only. So we initially entered this cross calendar around 41,500. Don't worry if you don't understand all these adjustments and all. I'll be making separate videos from basics to advanced level in adjusting all these spreads and cross calendars and everything. So this was the original trade. If I was there in the original trade without making any adjustment, by now the loss would have been just 13,000, but the probability of my trade going into profit is very less. As I did adjustments, still I was able to bring this green pyramid close to the current market. Any bounce back will push me into the profit area. That is what adjustments do for us. I do have some ideas, like if anyone want to practice, or maybe even if you want to do some paper trade or something like that, I'll just give you two trades. See if you can do some paper trade or manage something. So one trade is on GIL. I'll just show you how to enter spreads. So this is the GIL chart, what you are seeing on my screen. Let me go back to the daily chart. Even if I go back to the weekly chart, so this is the weekly chart of G Limited. You see, when you connect these two lows, this trend line will be extended onto the right side of the chart. Now, if you see what happened slowly, at some point it came close to this trend line. From there again, we have seen some bounce. And finally, what happened? The trend has been broken. When the trend has been broken, what will be the first target? There is some weekly demand area around 176. So this week price came almost there, and now we are seeing some bounce back from that level. Now let me drill down to daily level. So day before yesterday, it came touched the demand area and we have seen nice pullback from there. And yesterday also it opened gap down and from there it started recovering. Now the thinking is maybe by end of this month there is a chance it can go back and touch this trend line somewhere here and it can come down. So with that bullish view on this trade, we can enter some calls. And now the problem is already the stock has broken on the lower side. There is a chance it can even break this demand area and it can go much lower. So we are not sure what will happen, but we just want to take a chance, but that chance should not hurt us a lot. Okay, so now at least the price can go till 2018, 2020 area, or maybe even it can go back to the trend line. From there it can fall again. Once if the trade go here till to this trend line, we can book the profit. That is the plan. But how we can plan this in options? Look at this plan. Entering 20,010 call at 5 rupees and then selling 225 call at 2.5. The total amount required for this trade is 20,000. The maximum risk that you are taking in this trade is around 8,000. So where you will start getting profit only if the market go above 2013. In between, even if there is any spike in the price till 2010 or somewhere, still you can book some 1:1 profit or something like that. If you want to take more risk like 14,000 or something like that, even we can plan some nearby bull call. But if you are beginner to this, I recommend going with this. In case if there is any strong bounce back, definitely you will make some nice profit, maximum profit of 37,000. If there is no bounce back by end of this month, you will be losing around 7,900. Now the beauty of this options is, if it go in our direction, we'll make money. If it go in opposite to our direction, we need to give this money to the market. But in such cases, we at least don't want to give this complete amount. We want to reduce this loss, or if possible, we don't even give anything to the market. And how we do that? See, whenever you want to enter any bull call, there are two rules which you need to follow. Rule number one, always your RR should be 1:2 minimum. If you are losing 1 rupee, you should be getting 2 rupees. See that always your RR is more than 1:2. Second point, wherever call you enter, the sell call should recover at least half premium of your debit. Debit means whatever going out from your pocket is debit. So when you buy this, 5 rupees is going out from your pocket. When you sell this, 2.5 rupee is coming to your pocket. So now the total debit is 2.5. Just take this as 5. You're giving 5 rupees and you are taking 2.5 rupee. The total debit right now is 2.5. Now how you should trade this one? If it go in your direction, you don't have to do anything. Just book profit wherever it is giving you nice profit. Feel free to book. If it go opposite to your direction, wait till this 5 rupees become 2.5. Once this become 2.5, simply exit this at 2.5 and just leave this naked position open. So let me show you. In case if I close this around 2.5, there will be no loss at all for me in this trade. So by the time it will go 2.5, probably it would have gone like till 180, 170, somewhere like that. Some people might be thinking you have some naked sell option on the top. What if market bounce back all of a sudden? Yes, that risk is there, but look at the probability of taking that loss. Right now it is at 195. By the time your 210 call become like 2.5, either price could be around here only for at least next 1-2 weeks, so that there will be huge decay in the premiums. Then this will become 2.5, or there could be some fall again till 170 or 160. That is when your this call will become 2.5. From 160, 170 till 225 just in another 1-2 weeks will be bit difficult for the market. So it will be like very far away option. So it should be a bit safe for you to stay in the trade and come out with no loss. If once people get expert, there is another way of even turning this into profit. They will sell one more put of same value on the downside. They will convert this whole trade into short strangle, and that is how they manage. Initially, you don't have to do all that. You can simply try this a paper trade, or even you can enter a real trade with a risk of 8,000. If it go in your direction, book the profit. If it go against you, wait for this till become 2.5, then you can close this position and come out. And what you need to remember, right now it require only 20,000 margin, but when you close this position, you'll be having naked sold position which require more margin. See, right now you are seeing 20,000 margin. When I close the buy position, you can see the margin requirement will get changed. So just to maintain this sell position, you need around 1,60,000. If you don't have that margin to hold this naked sell, better do some paper trading. You don't have to do anything. So people who have such margin issues and all, I have another plan for them. You can try something in Biocon. You can plan something in Biocon as well. You can buy 235 call and you can sell 2 rupees call of 250 rupees. In this case, when this will become around 2.5, you can simply close this trade. Now the margin required is only 73,000 and the maximum risk after doing this will be only 1,500 rupees on the downside. This can be done even in a much better way by entering some nearby bull calls or something like that. Just as a practice, you guys can try this, or even you can do some paper trade and you can monitor this. This is how the spreads will work. And if I show you the Biocon chart, let me show you Biocon chart. I'll just go on to weekly chart. See, where is Biocon right now? You see this point? Once it tried to cross this level around the 2011, 211 level, but it could not sustain above. It saw some rejection over there. And later, after a couple of weeks, there was a strong green candle on weekly. And the next week, there was a huge gap up and the price went much higher. When the price came back exactly to this broken area, again, it took support. It went even much higher. Right now, the price is exactly around these areas. Maybe if you want, you can wait price to go like another 10-15 rupees low, then you can enter some nearby call spread over there. But the rule is 1:2 and you should get half premium on the sold options. This is how you need to plan bull call trades. And the reason, there should be a reason. You can't simply go and enter whatever you want in whatever stock you want. It's not like that. You need to look at the price action as well. You need to see if there is any possibility of bounce back from certain level. That is how you need to plan the trades in that direction. So for me, maybe there could be a chance it can bounce from here, or even it can come little low, and from there there could be some bounce from these levels. So one can plan the trade and you don't have to wait for the full trade. You can exit. If anybody take this trade, we'll talk and I'll tell you if it go little bit in your direction, how to make that trade complete risk free. And keep watching these videos. Down the line, I'll keep sharing from very basic to advanced level on how to do all these adjustments and all. This took again lot of time. Thank you so much for watching. We'll come up with next video later. Thank you.